the top three things this morning are number one, China, number two, Italy, and number three, the yen versus the dollar. So on China, number one, I mean, it's a good morning in the world to wake up to not just the U.S. political angle. So the reality is that that's what you got. But the rest of the world didn't particularly care. In fact, China's been closed. The stock market's been closed, that is, for the last 7 trading days or thereabouts. And it opened up. And it opened up because the Chinese economic data, inclusive of last night's China Services PMI number of 52.4 in September, which we'd call growth stabilizing in China, was a good number. We're long China. China was up 1.1%, and that's better than being long the USA. So that's point number one. Point number two, these Italians. I mean, these Italians, I love what's going on in Italy right now, not because I want to live there or at least espouse any of what they're doing politically, but the reality is that the Italians are proving once again that the government can save the market from itself. So again, when I see this, and again, the point is that the Italian MIB index is hitting a new year-to-date high after getting through that no confidence vote situation last week. You know that this is coming in the U.S. Number one, you're not going to default. Number two, you're going to have this rally based on the government saving you from themselves. So again, that's something to watch just in terms of a metaphor. And number three, the yen versus the dollar, which is easily the most important currency pair, if not the most important live quote in all of global macro right now, held last night, which is interesting. I have a trend line of support for the yen versus the dollar at 96.54, and we're back above the 97 line. So anything can happen here, folks. We're not going to default, and we do think if the dollar does hold the long-term tail line, this thing's going to get really interesting in a hurry. So that's your top three things.